Markets were expected to glide down with precision, but the administration had other plans. Welcome to Daily Market Waves with Investing Angles, where we break through the noise one candle and Elliott wave at a time. Today's waves hits hard. Volatility, not just elevated, accelerating. The dollar, let's just say, no one wants to hold the bag. Yields, more room to fall, but when they do, TOT gets the lift. Oil, another spot on call. But is this just a breather or the real plunge? Silver and gold, finally topping? The signs are here. S&P 500, still Swiss clock clean long term, but short term? Let's talk about that shortcut. Nasdaq, classic double top, and it already measuring distance. Special features of the day: the oil trio, Exxon, Chevron, and ConocoPhillips, with a deep dive into Exxon's charts. Technology sector, under the XLK lens, what's powering and what's fading, and a fresh midterm forecast on Japan's Nikkei index, the chart you didn't know you needed. If you are mapping reversals, planning entries, or just staying sharp in choppy markets, this is your tactical edge. Smash that like, tap the bell, and let's get into it. And as usual, we start with volatility. This is the volatility daily candles for the index and for the futures. So the closure is quite bullish, even though it went a little bit above the Bollinger Bands. But at this point, I'm not seeing any concerns, any reversal plans, even on the smaller hourly frames. So the daily is bullish, and if we look at the 2-day frame, it's also closed with strong bullish candles. Unless we see a very strong reversal signals in the next day or two, this is bullish. And speaking about the bigger frames, we remember that they closed last week and months with quite strong monthly and weekly candles. Now let's talk about the dollar. This is the chart, our long-term chart that we've been talking about for a long time, and our latest path right now is the red one, making bigger an ABC wave here for the wave 4 before moving higher. And speaking about the candles, candles are saying that they have much more room to go down. The daily is bearish, 2-day candle is also pointing down, and the weekly is about to break the 200 weeks moving average. If you remember the chart that I shared in the weekly report at investingangles.com with the precise target for the move down, just refresh it, the target remains the same. Now let's talk about the bond market. And we will start with all yields. 2, 5, 10, 20, and 30-year yields all are bearish. On the daily frame, they closed with bearish candles. 2 and 5 is continuation, 10 is most likely continuation candle, 20 and 30 are in neck patterns. Most likely this is a bearish continuation candles too. So no reversal at this point, no signs, at least no signs of reversal. And I'd like to specify the freshly made 50 by 100 days moving average bearish cross on the 30-year yield. Now, if we look at the bigger frames for the 10-year yield, obviously the daily is bearish with a freshly made cross last week. The hour bearish flag works perfectly for now, and we are seeing that the yield is moving towards the target. On the weekly frame, the candle moved below the 100 weeks moving average, which is a significant one. So we might see perhaps a few more weeks of declines. How far? It's difficult to say. However, based on this bearish flag formation, this is an ideal target. If we look at the 20-year yield, which is an inverse counterpart for TOT, this is the flag, a similar flag here on the 4-hour frame. Target is remaining the same. No concerns here. Now let's have a look at the TOT itself. TOT today formed a very tiny, just by 1 basis point bullish cross, 50 over 100 days moving average. This is a fairly significant event, and I would expect TOT to go higher. However, the question is how high. The red candles are not scary at this moment. This is the 3-day frame, and we are seeing a fair size of bullish continuation candle. So the chances for moving higher are substantial at this moment. The weekly is still undecided. We need a closure about the big red candle in order to reverse the flow here. So this will be decided tomorrow. And now if we look at the Elliott wave for TOT, we are seeing that the first wave was very nice, but right now I'm starting to having concerns because of the structure of this wave. And I would be surprised if this wave, instead of an impulse, would make some sort of an ending diagonal here, something like this, for example. And after that, we will see a reversal. And I would like to remind that this wave that started in January has been corrective. The question is how it ends, whether it ends with an impulse for wave C or it would be a diagonal. Well, at this point, we cannot reject the possibility of extending this wave for 333 or 33, but I think this is a premature talk at this moment. Now let's move on to our commodity section, and we will start with oil. So oil is falling, and yesterday we made a very nice call. This is the chart that we shared with our subscribers just before everything started. So this was we said that the flag is most likely completed, and these are the targets: 65 60, 61, 60. This is the minimum flag target. And what happened right now, oil today hit the low 65.725. Well, we just missed by a hair. This is the chart, this is perspective at which we monitor since December, since approximately this point when we said that, well, this is where is this chart? I think we have it somewhere here. Yes, this is the December 30th chart when we said that oil will move up higher, reverse here in this target, and then we'll move down. This is exactly what happened. So we still keep the original target here. It reversed in the middle of January, and since then it's moving down. Now it made a beautiful flag, after which we are expecting to move down. So, and this red line is a May 2023 low. If oil breaks through this point, it will be a very significant technical event. Well, now let's have a look back at candles. So this is the strong, very strong confirmation on the daily frame at our top, and on the 5-day frame we are seeing that oil is forming multiple bearish candles. So most likely tomorrow will be a bearish closure on the 2-day frame unless some miracle happens, and the same for the weekly. The weekly is very special. We discussed it multiple times, saying that this is a great setup for falling 3 methods. If oil loses some value tomorrow and it closes below the low of this red candle, which is, let's measure it once we are here, it's 64,995. So if oil closes below this line, it will be a confirmation, technically formation of a falling 3 methods pattern or combo with a very strong opportunity to move down. So I would say the odds would be so high that the move down would be almost guaranteed. Well, and now let's have a look at this technical perspective. I discussed it already, but let's keep it as a reminder. Today, oil made a cross. This is a huge cross. It's a 4 months frame, which closes at the end of April, on April 30. And if this cross happened only 4 times before, and if this cross indeed recorded at the last day of April, we would be looking for an average move somewhere between around 77 to 60%. This would be a decline of the top. So far, oil is 48% of the top, but we will be looking for the target between 50 and 30. This is the technical perspective, statistical call that we made a couple of weeks ago. So that's for oil. And now let's have a look at silver. Silver made a very strong bearish move today, no question about it. And most likely it formed a double top with the next target at 31 and the following target take a double distance at about 29.8, 30. Approximate targets. So far, I don't see any signs of a bullish reversal, and if silver closes tomorrow the weekly frame with this candle, it will be for sure a reversal, at least for one more week, or maybe higher, or maybe more. And the next candle which would be closing is this one, the 10-day frame. It will be closing on Tuesday, almost immediately after the weekly in 2 days, and the silver will have a very good momentum here if it closes with a bearish engulfing. Speaking about the Elliott wave formation, this is the one that we discussed earlier today in our video. So there are 2 potential paths. First is corrective one in A, B, C, or alternative C here, and another one is potential impulse, starting with an expanding leading diagonal, then forming wave B, and now forming an impulse for wave 3. And if this impulse moves a little lower, I think that it's already very, yeah, it's made a new low, and it's an impulsive wave. So this could be potentially wave 3, end of wave 3. Let's see how it develops here. If it makes wave 4 here, a longer wave 4, and then wave 5, we would be looking for a very serious impulse downward. And speaking about the SLV, this is this trust ETF is aligned with silver. We are seeing a strong break below the 50 days moving average, technically a confirmation of a top or even a double top here, which is better seen on the 3-day frame, which also closed today with very strong candle. So technically Harami, spinning top, and another big red candle. The weekly has a very good chance to close with a bearish engulfing. Yesterday we shared a mid-term perspective for SLV with our subscribers at investingangles.com. If you're interested, you can have a look it there in the weekly in the special report. Now let's talk about gold. Gold is not as clear as silver, and if we start with candles, I would say that this is dark cloud cover at this point. If it moves a little lower, it might make a bearish engulfing, but so far dark cloud cover is not as bearish as a bearish engulfing, and it would need a very strong confirmation and a very strong move down. So we might have to be patient with gold until it makes somewhat similar to what silver already did. And the 3-day frame is also not very convincing. The weekly is, so far it's even bullish, but let's see how it closes tomorrow. So we might be monitoring in and see what gold will do. Speaking about the GOD, also there is no confirmation on the daily frame, no clean closure on the 3-day frame. It's a incomplete dark cloud cover, which could be bearish, could be bullish, with better chances to continue higher. And the weekly frame is undecided at all. So no decision for gold. Silver looks like it's already made a decision, and I'm very skeptical about possible reversal, bullish reversal there. So that wraps up our commodity section. Now let's move to the stock market. So yesterday we were thinking that S&P 500 would take a more gradual path before moving further down. However, an administrative resource made a call, and the markets were panicking. Now we are seeing that it immediately went into our red path, something that we discussed before. We said either purple or red at this moment. So the red path has much better probability right now. And speaking from the larger frame perspective, this is our long-term chart, which, by the way, was finalized in January 11th. I don't recall many services talking about this potential move on January 11th, and if they do, just let me know. I'd like to give them a shout. Now let's move on to the candles. Candles are bearish, obviously, and we have a strong moves by technical indicators, particularly the moving average lines. They all crossed 50 by 100, and Russell is ahead of everyone. They already made a 50 by 200 moving average bearish cross. Now I would say Nasdaq would probably be the next one if nothing happens. Speaking about the 8-day frame, which is closing tomorrow, and it is stronger than the weekly one, the indices need a very strong move tomorrow in order to avoid a bearish closure here. And in order to fully reverse here and make a bullish move, let's say S&P 500 needs about 9%. I would say it's plain impossible. A rally of 9% tomorrow, maybe 1 or 2, but not 9. I would say that the indices are set for a move down, for a continued move down. And now let's move on to the next one. From technical perspective, the indices are aligned right now. We are seeing that all of them recorded MACD bearish crosses on the monthly frames. So this is a very significant event. These events were recorded by Russell and Nasdaq in March, and right now Dow Jones and S&P 500 are joining the other two. Speaking about the sectors yesterday were very bullish, and now you can see what one little news can do for them. Even though for mid and long term they were bearish, still I was expecting a little bounce, maybe a little bigger, before the next wave down. However, it didn't happen, and now we have a real shortcut. And the way it's administered, it was fairly brutal. Now the daily frames are bearish, and if we look at the potential weekly closures, they will also be bearish at this moment. Like for financial, for example, for technology, And if we look for industrial, all of them are set for strong weekly bearish closures. And I'm not even talking about an energy, which is very brutal. The only sector that is somewhat bearish is consumer staples. And if we look at the weekly frame, it has a fairly good chance to continue upward. But I highly doubt that this one sector would lift the entire market. Now let's have a look at the larger stocks. Microsoft, Amazon, Apple made all strong bearish candles. Nvidia, Meta, Alphabet. This is not a surprise at all. If you followed our forecasts and if you joined our private Discord room where we handle daily calls on these big companies, that wouldn't be a surprise at all. And if we look at the weekly frames, for example, Nvidia is set for closing with bearish candle. I think that's a similar for Amazon, also a bearish candle, and even Apple is a strong bearish candle challenging the 100 weeks moving average. And Tesla is already below 200 days moving average, even though it's been green, printing green candles for a while. I think that it's still going to go down, especially after this cross 50 over 200, which will happen next week sometime. Now let's have a look at Nasdaq itself. This is the chart that we shared with our members, with our followers on March 1st. We said that there is a double top and Nasdaq formed it, and it is going to go down one distance or possibly double distance. This is exactly what is happening right now. So we had one distance immediately after, then a little bounce as a flag, and now Nasdaq is looking towards 17.3, which is the flag target, and also a double distance of a double top formation. Speaking about the Elliott waves, it's not as simple, it's not as clean as S&P 500. There are still few potentials here, and I think that most likely it's going to be a red path. However, a purple one is also on the table. The only thing that wave A might move a little lower, the bottom of 8A, and after that we will start wave B somehow horizontally. And today is April 3rd. So that's Nasdaq, that's S&P 500. Everything is clear. The indices are bearish, and it also applies to Dow Jones and Russell. Now let's have a look at the features of the day, and we will start with the oil companies: Exxon, Chevron Corporation, and ConocoPhillips. All of them made strong bearish candles on the daily frame, and there is no surprise. Tomorrow they are going to close with very bearish candles unless some unexpected miracles happen. This is going to be a bearish reversal, bearish engulfing here, and tower top for ConocoPhillips. And for example, for Exxon, in order to reverse this, it would need to rally about 3% just to mitigate the bearish odds on the weekly frame. However, I seriously doubt about it, especially after today's strong move. And now let's have a look at ExxonMobil more closely. This is the chart that we shared earlier, and it looks like we have an impulse here, and we have a very clean corrective wave. And this move, by the way, it invalidated the impulse up by crossing this line. So now we have a chart that we discussed way before, And what is happening here? I think we need to do some adjustments. So this most likely was wave A, this was most likely wave B, and now we would be looking for wave C. And we would need to make some adjustments. So let me measure it approximately. So this would be wave. I would say that we would be looking for the targets in this area, like immediate targets, somewhere between 102 and 91. These were our original targets. So this would be adjusted targets. But I would like to say that wave C, this is the most typical ABC for a zigzag. I think that it might go lower if even 1.618 or even two distances of wave A. That's the possibility. But the most immediate targets are these. And today is not March 5th at all. April 3rd. This is the last time we touched this chart. All right, so that's the perspective for ExxonMobil. And the next one I'd like to discuss is the technology sector. This is our chart that we shared with our members on March 25th. We said that technology most likely completed the flag here, and now it is about to move down. This is exactly what happened. Wave 4, and now we are looking wave 5. Potentially this could be wave 5, but I would like to see it a bit longer. So this might be wave 1, 2, 3, 4, and 5, possibly. There is no overlap here, and wave 3 is fairly clean impulse. However, it might be extended at this point. So that's the possibility for technology from Elliott wave perspective. Once we have this wave C, we would be looking for some bounce for a corrective action or consolidation for another corrective wave before moving down. But the most important thing that we have most likely have an impulse down from technology, and this is big. Now, if we look at our initial call, which was made when on February 16, when the technology was 239, 240. This is the call on February 16. We said that technology is completing an ending diagonal and it is about to move towards 190, which is a 21% drop. This is exactly what happened. So we are very close, just five points above the target. And if we look at the bigger frame, so the technology on a daily frame is candles made just a strong cross, 50 over 200 days moving average, which signifies a continued move down. And the weekly just lost, I can say it lost the 100 days moving, the 100 weeks moving average. And if we look at the bigger chart here, this is the one that we discussed previously. I would like to say that the weekly formed three black crows here, and from technical perspective, this one of the strongest technical formations ever. And if we look for somewhat similar, this is what happened in 2000, in year 2000. The same three black crows of very similar technical support, breaking through the 50 days or 50 weeks moving average. So I would like to say, and by the way, technology lost then 82%. So if the history repeats and 82% is lost, then it's going to be here. Technology is going to go towards $40. So far, it's down by only by 20%. And another technical estimate here that we made way back in March 15, and there was a video for this one. This is the MACD bearish cross on the monthly frame by technology. By all statistical means, this is the target, 160, but perhaps 147.45 would be also possible because this particular cross, MACD cross, is higher by magnitude than the previous one. And this was our main point of estimate. Well, that's what I wanted to say about technology. And now the final chart of the day is Nikkei. Recently, I heard multiple, oh, Nikkei is going to go down and it is going to lose. Well, this chart we shared with our subscribers on February 22nd. We said Nikkei was going to lose big. And this is what is happening right now, exactly. So we knew about it more than a month ago. Right now, Nikkei hit the first target, 35K, and it's already at 33.5. And by the way, it's already 12% loss after our call. And looking at this particular wave, I would like to say that 31 to 28.5 target might not be enough for the wave like this. If we consider this wave as an impulse, it might go like this, for example, and with the potential targets somewhere here around 27. That's the perspective. That's the perspective. If everything goes as discussed. Well, that's the perspective for Nikkei. Nothing rosy here. Expecting a bearish move, potentially a very strong one to continue. Well, that's about it for today. And from oil's sharp reversal to the dollar's decline and volatility's climb to Nasdaq double top, the signs are stacking fast. Whether it's the XLK flashing signals, Nikkei carving a midterm path, or TOT watching yields fall, the roadmap is forming. What's your top signal this week? Are you playing the commodities turn or riding tech's final wave? Drop your setups in the comments. Let's compare notes. If this gave you a sharper edge, like, subscribe, and ring that bell so you never miss the next reversal before the herd even blinks. For full multi-frame Elliott wave and candlestick deep dives, visit investingangles.com. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the term before the herd even flinches.